Welcome to Zen and the Art of Real Estate Investing. What if you could learn from experienced real estate investors, find out what got them to where they are now, get insight into their daily habits, and take these insights to inspire your own growth? Each week, Jonathan Green shares an in-depth look at the mindful approach to real estate investing. Jonathan is a lifelong real estate investor, advisor, and coach, as well as the founder and team leader of Streamlined Properties. Whether you're looking to start from scratch, get to the next level, or just for a straightforward and honest approach to real estate investing, Jonathan seeks to provide a free mentorship program you can take with you anywhere. Now, here's Jonathan.
If you're interested in real estate, or you're already a real estate investor, which is highly possible if you're listening to this show, you might think that you're chasing the money. But we all know now that what you're really chasing is freedom of time. On this episode with my guest, Lisa Moore, we're going to talk about developing proven strategies to live the life you want. And what that means is getting that time freedom. We're going to go through the journey for her and her husband, John, how they got to where they are now and where they're going. Let's go. But wait, I don't normally do this anymore, but I just want to remind you because it is important. We're trying to grow the podcast, and the best way that we can do that is if you click the subscribe button so you get the episodes first thing every Monday and Thursday. I would appreciate it. Let's get to Lisa's show. This is episode 146 of Zen and the Art of Real Estate Investing with my guest, Lisa Moore. Lisa is the co-founder of More Life Capital with her husband, John. They specialize in multifamily assets in the state of Utah. We're going to get into our journey. Lisa, welcome to the show.
Thank you, Jonathan. Happy to be here. Looking forward to it.
Yeah, I'm excited to get you on the show, and I'm glad that we actually have met in person back at BPCon, which is a shock because I haven't met everybody in person, so it's good to finally get you on here. Let's start with where the transition started. Growing up, were you interested in real estate, or did something happen along 2017 that led you to go on this voyage?
I feel like I always had sort of an interest, but never did anything with it. It always seemed interesting. My mom's best friend, she was an agent, and I can just remember talking to her and stuff like that. And she was always one of the top agents in Massachusetts. And I was like, man, that seems cool. And I sort of thought about getting my license when I was younger, but just never did anything with it. And then when I moved to Utah, I was like, all right, I want to buy a house, want to get involved in real estate, and started the journey then. So.
Yeah. Was the start of the journey more about just wanting to get into a house and then see it? Or were you thinking long-term, investment status at that point?
I was thinking investment. My plan was to buy a single family and house hack. I wanted to own a house, but didn't want my expenses to get significantly higher.
Yeah.
So I knew if I house hacked, then I could offset, which I was able to do. And I actually was living for less at my house than I was at my apartment. And now we still house hack, and it pays for about 93% of our living expenses in this house. So we are obviously big fans of house hacking, but my plan was to buy and then year or two later, move, keep that one, rent it, and kind of just keep doing that and see how it evolved. And we did that and bought some other ones and just kind of kept growing. So.
Are you engaging in the single family house hack where you're either renting a lower unit or a room, or are these multifamilies?
We've done both. We did duplex, triplex, and then our current house is a single family. And when we bought it, there was it was a sort of finished basement, but we remodeled all of it and turned it into an apartment. So technically we're in a single family with a mother-in-law basement right now.
Yeah. Yeah. But when you got started, were you thinking, hey, this is a great way to scale out of my regular job? Or were you just thinking wow, this extra income would be excellent?
My goal was to be able to get out of the W-2. My goal was to do it. I think at first I was like, if I could do it by 50, and then it was by 45, and I did it at 37. So it was a quick escalation. Once I feel like I'm one of those people, once I like decide on something, it's like full bore ahead. And we were just kind of insane for a few years of buying and doing refinances and remodels. And we like look back on, we always do like a year in review and write up everything we did. And
Yeah.
as you're like writing up those 2 years, it's like, yeah, I can see why we want a little break. We've been kind of nuts the last couple of years.
Yeah. I mean, if you just look back on the first couple of years, what do you think one mistake that you made that might be able to help new investors from putting their same foot in the same hole?
Not factoring enough for maintenance and vacancies. We would look at it, and everything we bought was value add or distressed. So we were going and doing like complete remodels. So like everything was new. You still have stuff that comes up. And we were fortunate that it didn't hurt us too much because the Utah market's just been going nuts and rents were always going up and things like that. If we were in a more stagnant or in a market that was slightly going down, we may have been in a little worse situation, but luckily we had the market in our favor. Now we factor in more for maintenance and more for vacancies, but at the beginning we definitely didn't factor in enough. Even with it being brand new remodels, you always have something.
Yeah, in terms of vacancy, sometimes I've found that when you're new, you kind of overvalue what you think it's worth on the rental market because you're just so hopeful that you did your first one. Is that something that happened?
Overall, actually, we were pretty good because my husband had been a landlord for 20 years.
Yeah.
So with that, we were pretty good. We did have one property last year. We bought it as a duplex. Remodel, of course, ended up going over budget. We ended up doing more than we expected. And that was the first one that when we underwrote what we expected rents to be, I think we were hoping for like 24, 25. And we came in at like 21, 22. And that was the first property that we really overestimated what we thought it could rent for. But that also was coming in at a time when the market was starting to drop. There was more stuff coming online. So the availability of units was higher. So the demand just wasn't quite as strong as it was when we started the project.
Yeah, and you still ended up with a polished asset. So it's not like, you did all the work to get it up to basically renovated. So that obviously helps your long term in terms of maintenance. Is that something that you guys focus on with John's skill set? Of course, once you get the property that is distressed, the most important thing I think for new investors to know is like, you really need to turn it around the right way. So you decrease your CapEx for basically ever. After that, it's the people who kind of half do it and then have no reserves, and then a furnace breaks or they realize like they didn't treat the mold. That can be an issue. That's something that it seems like you guys are focused on and making sure that you're turning it out right the first time.
Yeah, we do everything we can because we plan to hold long term. We don't flip. We're not short term investors. We are buy and hold. Anything we buy, it's expectation we'll hold it forever. We sell things, like we've sold a few properties, but our mindset when we're doing remodels is we will keep this forever. So we want as low maintenance as possible. So we're making sure that, if it's an old furnace or water heater and things like that, we'll fix it. The plumbing, we do a lot of old homes. We're updating the plumbing. Like we have a duplex right now that, does the plumbing need to be updated? No, but we're going to be finishing the basement. And once we sheetrock all that and finish it, we'd much rather rip all the plumbing out now, redo it, and know that it's good to go than a few years down the road, we have a leak on the brand new unit that we just remodeled.
Yeah, I think that's absolute gold for newer investors or people who just have bought kind of maintenance ready properties, because that's what can really put you in a pickle, is just not getting everything done from the beginning. If you have existing tenants, then it makes sense. You're going to let them ride it out and fix when they leave. But if you have the units vacant, you're trying to protect. So when you move to the next asset, you'd not leave yourself a problem at the last one, right?
Yeah, it definitely is something that the maintenance can really creep up on you with properties. And if that's the level of properties that you're going for, or that lower end, then you're always going to have it. But we go for, more middle class, higher end stuff. So we do not want to deal with maintenance for doing nicer remodels and making sure that our maintenance is as low as possible going forward.
Yeah. I feel like, I guess, did you ever get when you guys were starting and you're starting to grow a portfolio of rentals, did you get into the kind of FOMO where it was like, well, we could, you start focusing on, we really need another unit, but you're still working on one. I feel like a lot of people are balancing that. Like, I know we have the capital building so we can get another one, but this one's not perfect yet. And then you end up with two that are imperfect, which can create a problem.
Yeah, we definitely have had some overlap on projects and stuff, and where we personally are not looking to grow to be tens of thousands of units and be the next, Brandon Turner. We try and do one project at a time, but there has been times where we've been in a project and found another deal and we're like, oh, this one's like too good to pass up.
Yeah.
And then it's balancing the two for sure. But yeah, we definitely have had the fun of the balancing game of two big projects.
Yeah, but that's a good problem to have once you start to understand what your buy box is. If something presents itself, it's almost like, well, this is too good. We have to figure out how to make this an asset. And then maybe we just, finish that one and then move on to this one.
Yeah.
How did you start the deal flow for the properties? Were you looking on the MLS in the beginning, or did you have access to off market or wholesalers in your area?
They were mostly all on market to begin with, the MLS. We also, any property we buy, we will go and we'll talk to all the neighbors, and one, just to make sure that we're friends with them. And if anything ever happens, they call us first. And it's also like eyes on the property. So if anything's happening, when we've had this happen, like neighbors call and be like, hey, just so you know, like this is going on, which has been very helpful. And when we're doing remodels and things like that, it's just always good to have the neighbors on your side. And we found properties that way. Our neighbor, the duplex that we bought, two duplexes off of the same couple. They own the property next door, and started talking to them. And there's another property. It used to be an 8-unit, and it's got a weird long story, but that's another property that we've been like working on now for, that one's going on like a year. That one's one of like the long build relationship type one.
Yeah.
But yeah. So, and now we're working with brokers, but also starting to do some off market. We just started sending out postcards, see how that works.
Yeah. I think the advice of trying to figure this stuff out in the beginning, getting where you're going to go to wholesalers, but a lot more now. So if you went to them in the beginning, it would be harder to kind of vet the deals that they were sending you. And now you guys have so much experience, you're going to be able to kind of go through, or direct to seller, you have the dialogues and everything already. And hopefully you also have a lot of proven assets that you've already done. Because I think what you said was really important. I used to do knocking around foreclosures because you couldn't have access to the property, but I still think it's really important to know the neighbors on any asset, especially if you're not going to be house hacking there, and being someone who's available, because like you said, they're going to be your eyes and ears from the outside.
Yeah.
You don't need to have cameras everywhere to find out what's happening. They can tell you, this car's been there. I don't think that's your tenant. And that can really help you out long term. And for you, it turned into multiple deals, which I think people forget about.
Yeah. I mean, everyone we talk to, it's, if they don't have rentals, it's, well, if you know anyone who does, let us know. So
Yeah, Deb, have you guys always planned to stay local? I mean, it seems like you're really focused on Utah real estate now, near you in Salt Lake and around those areas. Have you thought about branching out, or are you really comfortable staying in the zone?
We own property in Colorado as well. And we did start looking out of Utah, mostly because we were having a hard time finding deals here. And as we started looking at other places, when the interest rates were 9-10%, like it was hard to find something to pencil anywhere. And I was finding that I didn't feel like I was getting enough traction trying to look at multiple markets. So that's when we're like, we've had success here. We've done well. Let's just focus in 2024. Let's just focus on Utah. We'll see what that gets us. If, partway through the year, we're like, wow, there's nothing that's even close. Like, then we'll consider it. But, we have a couple deals right now, a 12-unit and a 16-unit that we're looking into. And there's just been more deals coming. So I think we will just stay focused on Utah. I'm focusing just on Utah and the small to midsize multifamily. My husband, he's doing some stuff up in Idaho. So we do go outside of Utah. He's doing Idaho. I'm focusing on Utah. So that's where we're at now.
Yeah. And so, in your mind, why are you guys kind of thinking 50 and below? Is it a management thing for you?
50 is just sort of like an even number. But
yeah. I mean, in general, it doesn't have to be on the dot. Like, oh, you have a 51 unit. Now you're a liar.
It was more because we're marketing towards we're marketing direct to seller, and we're going for that boomer generation that owns assets, that's looking to retire, that's looking to get out. So our goal is to do working directly with a seller. And typically once you get in, I mean, even 30 units and above, it's going to be harder to find individually owned and not, especially in Utah where they're more expensive.
Yeah.
But mostly we're looking to work directly with an owner and not buying off of another syndicator or something like that.
Yeah.
And that's the last couple we bought have been that exact situation. They're retiring. They don't want to sell their asset. They sold a couple before they met us. They knew they were going to have to pay capital gains, but they grossly underestimated how much they were going to have to pay.
Yeah.
And then they're like, and they'd bought seller finance, so they were familiar with it. So when it came to the next ones, they're like, yes, please, we need to seller finance this. They're like, and we want the income. They're like, we don't need a chunk of money. We want to continue getting that monthly income. So that's the type of sellers that we're looking to work with. And that typically is just going to be your smaller, under 50 units apartment buildings.
Yeah, I mean, if you can get those on seller finance now with what the rates are for commercial large scale now, it's a huge win and really a benefit to them. It's just whether, how did you learn the dialogues to make sure you were kind of seeing if seller finance was available? Because I think that's, some people are like, I don't have any money and I want seller finance, but that's not really the best way to get seller finance. You have to know why they need it, how to approach it. And they also have to know that you have assets, or else it doesn't, it's like a gift. Not everyone wants to give you a gift.
Yes. Yeah. Reading a lot of podcasts, listening on learning about the seller finance, locally going to meetups, talking to people that are doing it here, and really just like the education on it and knowing you have to go at it of what does your seller need? Like figuring out, there's a book, you can't teach a kid to ride a bike at a seminar or something like that.
Yeah.
And that one really goes into it. It's like finding out like what are the pain points of the seller. And seller finance does not work for everyone. But in certain instances, if it does work for them, it can be a huge, huge benefit. Like the sellers that we bought, they're like, we do not want to sell this outright. We do not want that tax bill. Like we've already paid a ton of capital gains. Like we want to keep getting the income. So knowing what your seller needs and what they really want and what is their financial goals, if you can figure that out, then you can figure out, okay, what's the best way to structure this deal and how can we make this an offer that's going to work for us, but also solve their problem and make it's got to be a win-win for both sides.
Yeah, and I'm sure you factor that into your list building. Like you said, you're looking for this generation who's probably owned these 30, 40 years. So the capital gains are huge. If they want to take it, great. But at least you have another opportunity for a conversation as here's how you can save enormously. And then they don't really need the down payment either. So you can end up with really, really soft down payments because that benefits them because they would pay the lump sum on the down payment instead of just paying it on the monthly. So I think people forget that the ideal seller finance scenario really is very low on the down payment and not even high on the payments in general. Has to match the property, but they have to pay, monthly on those payments. So it's nice that you've been able to work that in the beginning. Did you think that was going to be an option when you were first getting started? Or was it like, hey, that would be nice if we could just get it without having to go through traditional, DSCR loans or banks?
I don't think I even knew what seller finance was when I bought my first house. Like, I really I didn't know much about real estate at all. And I binged, Bigger Pockets is like a lot of people and I didn't even know about Bigger Pockets at first. So I bought my first in 2017, 2020, we really started buying. I don't think it was until like 2021 that I learned about Bigger Pockets. And all of a sudden, just this like world of information. I was like, has this been here the whole time?
Yeah.
So binge listening to Bigger Pockets. I feel like I got a college degree's worth of education within a few months because it was just like nonstop listening to their podcasts on all different areas. And that's when I really learned about like the seller finance and being able to purchase properties and do that without having to go through traditional financing. So,
yeah. How were you able to distill what you were getting in all the information in the podcast and then put it into action? Because I think there's people now who are really good on listening. They're really good on reading, but then they still claim that they're in analysis paralysis. So what was the one thing that took you from information, not necessarily overload, but loading up on all this info and then making sure that you were still putting it into action? Because the good thing is you were already into action when you found bigger pockets, but that probably helped accelerate it a lot more.
Yeah. My background is financial analysis, so that definitely helped. Like, that's
Yeah.
just how my brain works. And so having that, but also just, I'm definitely once I like kind of decide on something, it's full steam ahead. And for me, once I got a taste of my house hacking, and that was just literally just renting a bedroom, and like my
Yeah.
goal was a few $100 a month, and I was making significantly more than that, and I was like, ooh, like this is really nice actually. I can keep doing this.
Yeah.
And it was, I don't know, it's just having confidence that you know you're going to fail, but you're going to figure it out and keep moving forward. Because there's no way that anyone is going to be in this in the real estate game and not make mistakes and not fail. Like anytime I talk to somebody, they're like, "Oh, I've never made a mistake." I'm like, "You're either lying or you haven't been doing it long enough." Because it's impossible to not make mistakes in doing this. And you just have to know that. You just have to know that like you are going to screw up. You're going to make multiple errors and multiple mistakes, but you're going to be able to recover from it. You're going to learn from those, and you have to be willing to fall on your face and just keep moving forward.
Yeah, the last person I want to invest in is the person with a perfect record, because then the next one's going to be the problem. It's like, well, at some point it's going to happen. I'd rather not sign up to be the next or get lucky until the streak ends, because it's going to end at some point, or the market will dictate that the streak has to end. Then.
Yeah, definitely. There's always...
I mean, that is funny though. I mean, there are people touting such a perfect record, but I think there's a lot of different ways of failure. Like, as you guys have found out in real estate, I always think if I break even on a property or early on, because I've been doing this so long, I would just say, well, I mean, I felt like it was a windfall because I got the deposit money back.
Yeah.
So like I definitely wanted to make more, but hey, now here comes a deposit money that I can redeploy into another asset, and maybe that will be a win. So, I think that's the really good thing about real estate. Coming from the financial side, did you see real estate as something, since it's so tangible, that you could have more impact, especially with what you and John do? John has a skill set to remodel something. So then it's like, wow, value add. You can't do that with a lot of other financial assets because they're just not tangible.
Yeah, and I've always definitely been drawn to the tangible. Like in my financial analysis career, I worked for manufacturing majority of the time. I did have a short stint where I worked in it wasn't tech, it was more like communications. Like they sold TV, internet, that type stuff.
Yeah.
And I didn't enjoy it nearly as much because it wasn't tangible. So the manufacturing has always been something that I've been way, way drawn to.
Yeah.
And just because it's tangible. So with the properties, it was the same. And when I bought my first house, like I wasn't with my husband. I was a single young female buying an old house that, it needed some updates and some repairs. And I was like, I don't know how to do this, but I'll figure it out. Like,
yeah,
we'll go for it. So
what part in your journey did you find Liz and Andresa and invest her? Because I know that was something that really helped springboard you into like more action and more camaraderie, in the industry.
Yeah, they're amazing. I learned about them just a little over a year ago.
Oh, wow. Okay.
Yeah, I'd heard of Liz, but really found out about Investor. It was the beginning of last year, so it's been just over a year. And yeah, I went to their Investor conference, which their next one is next week. But
yeah,
that was like the all-female conference, and that was a really, really good conference. And they've been a great resource and a great help too, and a lot of education in that platform.
Yeah. I mean, was it helpful to just see, look, hey, there's all these other people just like me doing this already. I can even upgrade even more.
Yeah. And just a lot of people get very stuck on, and rightfully so, like they do well at what they're doing. But a lot of people, it's like multifamily is the only way to go. House flipping is the only way to go. And it's like, no, like there's so many avenues within real estate. And that's one of the things that's great about it, and why I think anyone can find something within real estate that works for them, because there are so many different avenues. And that was one of the things I really liked about them and their approach, where it's like, there's no wrong way to be successful in real estate. Like find what you like and find what avenue. Like if you love flipping, then be a flipper. If you love doing wholesaling, if you love multifamily, single family, whatever it is, just decide what you like. but don't let, the outside voices or the people you see on TV be like, okay, this is the only way to do it. You're never going to make money if you don't do self-storage. You'll never make money if you don't do multifamily. Like, all of these people are successful because all of the different asset classes work if you learn how to make them work and you learn how to invest in them properly.
Hey, it's Jonathan. On this brief interlude, I want to give you an update because our new website has launched. zenandtheartofrealestateInvesting.com is live, and you can go there and check it out. I really want you to go check it out because we're going to still be upgrading more, but it's going pretty well so far. This is a very guest-focused podcast website. Each guest has their own profile with their own links to our 10-minute clips on YouTube, and also links to the episode. You can search for guests using the alphabet, or you can search in the search bar. Soon we're going to have tags up as well so that you can search in certain categories: short-term rentals, mid-term rentals, syndicators, multifamily, and then you'll be able to link to the episodes on that. I have really put a lot of time into working with my team to get this website to be extremely visitor-friendly and very guest-friendly. I hope you enjoy it. At zenandtheartofrealestateInvesting.com, let's get back to the show. I feel like some newer investors, if I'm just judging from the forums, are looking for somebody to tell them what their asset class should be. And my response is always like, well, what do you like? And if you don't know what you like, start doing some research, go see some properties. Are you interested in being a landlord? Because it's not all roses as a landlord. And that's, I think, an interesting question for people. How was your journey? I know John was a landlord for a long time, but when you started and now you're, started with a house hack and then you're separately a landlord, how did you start to understand that process was okay for you? Because it doesn't work for everyone. And then sometimes those people will pay too much out in property management because they just really hate everything about it.
Yeah. Getting like the taste of it doing the house hacking was, I think, really good because it was, if I messed up with one person, they weren't going to be there for very long.
Yeah.
Luckily, there was, no horror issues of things, but you have to be comfortable with uncomfortable situations and uncomfortable conversations. And I'm someone where, like, I do not mind having a conversation with kind of anyone and everyone about something. Like, I'd much rather call out, like, this is an awkward situation and just address it and take care of it. Because if you let things fester and you're not very clear with your tenants, things can go south quickly. So if you are someone who has a very hard time saying no and you're a people pleaser, you can be successful, but you have to put up a lot of boundaries. But it's really, I feel like it's one, like most things, like until you actually do it, you won't really know, because it's, you hear people talk about how horrible it is to be a landlord and blah, blah, blah. And then I started doing it. I'm like, this really is not that bad. Like we've never gotten a phone call at 3:00 in the morning. Have we gotten a Friday night phone call? Yes. A Christmas Eve phone call? Yes. But we've never been woken up in the middle of the night from something happening. And I look at my options. Would I'd rather have that or be working a W-2? It's like, I'll take the 3 times a year, 2 times a year that we might get like a night or weekend call over the W-2, like being a landlord. And we've got our systems and processes, and we're building that back out now that we've taken it back, because we did hire a property manager for a while. It did not go as expected. And so we're bringing that back in-house and building things out. And it's like anything, you have good systems and processes, it's a lot easier to manage and do things if you're very set on how things go and clear on your systems.
Yeah, and going back to what we said before, if you're taking care of the property on intake and making sure that it's ready for tenants, you really are going to reduce your maintenance calls over time by a dramatic amount. I mean, if you pick up a D property and think you're not going to get calls, like, stuff doesn't work. I mean,
yeah,
that's why it was so cheap. So you're buying into maintenance. I think when people are getting, hey, the price looks good, well, there's other things that come with that. Is that why you stick to this BC range? Because you know what to expect and you know how to turn C to B?
Yeah, we don't want to deal with the D level, and that we like to have nicer places. We take pride in our properties. We want to keep nice homes for people. Like it is their home. It's where they live. So we've definitely found success in that area, and it's good tenants. Yes, you always occasionally will have something that happens and whatnot, but overall it's just a good solid asset class for us, and that we've done very well at, and we found some great tenants. So
yeah. So as you guys were building your journey, obviously you're getting properties for yourself, but then you started More Life Capital. So tell us a little bit about why you started that, like where you were at in your journey and what you're looking to do with that. Because I think that'll help other people who are doing well on their own and they're always trying to figure out, do I need more money? Can I help more people? How am I going to do this?
yeah, and that was the capital. Our capital can only go so far. Like a lot of people, one of the reasons that they end up feeling like they get stuck or can't continue on is because they run out of money. And so we started More Life Capital with the expectation that we know that for what we want to buy, like my goal is to buy $5 million worth of real estate this year. We know that we are going to need capital for that. And whether that comes in the form of a partnership or a JV or a small syndication. So we started More Life Capital knowing that we are going to be needing investors. And, we've started promoting that and talking about that on our social media and stuff like that. And we do have, a backlog of people that are like, hey, when you have a deal, let us know, where we definitely want to invest. But that was where the More Life Capital came in, is we knew we were going to need additional capital to get to where we want to go. And working with other people and being able to provide them a good, solid investment backed by real estate is something that we invest passively as well. We have a mix of it. So it's something that we knew is going to be a necessity to continue to grow.
Yeah. I mean, what were the pillars that led to the confidence to be able to know, like, I think we're okay to ask for other people's money now? Because that's it's a very different transition. You really need to be ready, because we both see people out there asking for money and you're like, why would I give you money? So how did you kind of perfect that confidence wise and then pitch wise to know, like, hey, this is going to work. We're ready to do this.
To me, it's having the track record of, we've done X amount of deals, and, we've done 12 deals now. We've gone full cycle. We've bought, we've rehabbed, we've refinanced, they're cash flowing. To me, having that track record is a huge part of it. Because I think about, if I was to invest with somebody, I don't think I would invest with somebody who had never taken a deal full cycle. And one of my pet peeves with the multifamily and the investing world is, and I can say this as well, I can say that I have over 200 doors, but some of those are as an LP.
Right.
And in a way, I don't think those should be counted, because yes, I was fortunate that I had a sponsor that was very open with teaching throughout the whole process. So I learned a ton in doing that, but most sponsors don't do that.
Yeah.
Most sponsors, it's like, send me your money and we'll send you your monthly check. But fortunately, they were very open on educating and stuff. But there's people that I see that are, I bought 500 doors in my first 6 months. I bought 1,000 doors in my first month, but they invested in a fund and invested as an LP. And to me, that's a very different thing than actually being the one to go to find the deal, to underwrite the deal, to acquire it, go through due diligence, go through the stabilization, know what it is to manage a property, know what it is to deal with that, the asset management, the property management, and then making sure if you're selling it or if you're refinancing, does that deal work on your exit plan? And that to me holds way more weight than, I have 1,000 doors, but I've invested all of them as an LP in a fund. Yeah. So I think just having the track record to be able to show, hey, this is what we've done. Here's where we've messed up. But we've got one deal that went bad. Our other 11 have been great. And this is our portfolio, and this is how we're performing. So.
Yeah. I mean, a bunch of important points in there. And I agree. I think it's important to say that you're involved in this amount of doors, but I do think I always use a calculation about what my percentage of the door is. So if I'm a 10% owner in 100 doors, then I own 10 doors. I mean, that's just math. So I think that you can tell when people are kind of fluffing it in another way. But I think the second part that I think is really important is that you were involved as an LP before you started to ask for money. I think that is just, unbelievably important. because then you can really understand like what it's like being on the side of having someone else control. Like you said, you were fortunate that someone give you a little bit more access there. But normally it is like for me now, when I'm passive on syndications, I don't want to be involved. I know I know the sponsor syndicator. I'm just like ready to just pick up the check. But
Yeah.
when I was younger, I would like to know a little bit more about it, so then you can do what you did and then create something and slowly build it that way.
Yeah, and that's true. Like now, if we are investing in something passively, yeah, I obviously want to know the numbers in their business plan, but the extent
Yeah,
of
I do
information
read it.
yeah. So I definitely don't get as deep or as detailed because now I have an understanding and I know how it works. But yeah, that first time, like, and that's something that we're working on creating, like a little ebook type thing on what it's like to invest as an LP, because I feel like there's so many people that just know nothing about real estate and they may want to invest in it because they want the benefits, but so many sponsors, they're not there. They don't look at it, their position as I'm going to educate my LPs.
Yeah.
Like they'll give them a quick rundown, but I think as an LP, having gone through it myself, it's like, okay, these are the things that like we really wanted to know. And just giving that education is like, hey, when you're an LP, like this is what you should expect. This is kind of the process. Here's the information that you should look for. Here's what you're going to get, but here's what you're not going to get. Like you are not going to be involved. You are not going to have a say in anything. You are just handing your money over.
You're not choosing the siding. Just be quiet.
Yeah.
That is important. I mean, becoming an LP, there's a lot of ways that people look at it. They think of it as passive investment, which we both know that it is pretty passive. Syndication is like one of the most passive. You have really not that much control. But also I feel like there's the people who like they want to learn stuff or they want to have some input, and then the LP is not going to be a good fit for you, or they're like judging documents that they don't even know what they are.
Yeah.
So I think it is hard to kind of figure that out. Do you agree? When I read Brian Burke's The Hands-Off Investor, and I realized like, wow, vet the sponsor. Is that really important for you? And especially because you guys are so straightforward now as a sponsor, you really want people to be vetting you personally, that you want them to look at the deal, but you want them to rely on you, as sponsors of the deal.
Yeah, to me, the sponsor is way more important than the actual asset.
I completely agree.
And I've met people at conferences that have been talking about buying a deal, and they're like, "It's a great deal, blah blah." And I ask them about the management, like, "Who's gonna be managing?" And they're like, "Oh, we're gonna self manage this." I'm like, "Have you ever managed before?" Like, "Well, no, but it can't be that hard." And I'm like, "I would never invest with you." So to me, like, I will invest my money with a sponsor, and most of the time, obviously, I want to know the deal, but like I would be more apt to blindly put my money into a fund with a sponsor than I would an asset that looks like it's absolutely amazing with a sponsor I don't know or don't trust.
Yeah, that's great advice. I hope everybody heard that. Yeah, trust the sponsor first. Of course, you want to do your due diligence on the asset, but I look at, like you said, I look at proper exits, what they were, comparative markets, if they're working in the same market. I don't want to be the first expansion run. If you guys say like, hey, now we're just going to hit up Florida, I like the sponsor, but I want to know like why Florida. What do you know about Florida when you make a transition? I think that's really important.
Yeah, there's a lot that goes into that, and there's definitely the areas where I feel like people just now like they just want to get deals and they just want to buy stuff, and if you don't understand what you're getting into going into different markets, whether that's how the insurance is going to be changing, especially in places like Florida and Texas and these areas,
absolutely.
Or taxes. Like there's some states where the tax almost never changes while you hold it, but as soon as you sell it and somebody else buys it, their tax could be significantly higher because it'll be readjusted and assessed based on the new sale price. So it's like, if you don't know about these things when you're going in, if there's a transfer tax and all these things, and if people just jump into new markets because somebody sends them a deal like, hey, this is a great deal, I know this market, it's really good, but the sponsor doesn't know the market, like that could get them in some big trouble.
Yeah, I agree. So now, though, as a sponsor and looking for deals to bring other people in, what do you guys think your ideal avatar is for someone as an investor in More Life Capital? Because I think that's also important because it's not everybody. I think people think like, oh, you're doing a syndication, so you'll just take anybody's money. That for a lot of reasons we just talked about, that's not always a good fit. So what avatar are you building that is a good mix with what you guys want to do?
Yeah, and that's something that we've looked at a lot. And I feel like we kind of have a couple because I do love helping and teaching and educating people.
Yeah.
And we do have a handful of investors that they want to invest with us because we will show them, I will do for them what I had a sponsor do for me and walk them through like any part of the process that they want to see or know about. Like I will be more than happy to educate them on that and give them that inside look because I think it's important to help the people that are looking to get started and looking to grow. And some of these people, like they don't want to quit their jobs now, but they know that they want to get involved in real estate.
Yeah.
And so on one side, I'd love to have people who are looking to learn and teach them and show them like what we do. But then also just we are super outdoors. We love to hike and snowmobile and ski and stuff like that.
I'm very familiar with both of your Instagrams. So it's like, yeah, I'm on that journey.
Yeah. So like the people that put more emphasis on their lifestyle and living the adventurous lifestyle and doing things and be able to travel and do the things they want, but still building equity and getting those benefits. Like those type people, like we just connect with those, like that's who we are. Like if I was to go and try and talk to doctors, like I can't relate to you. So I think you also have to think about who you can actually genuinely connect with and who you can have a conversation with. Like if I went to some doctor show and it was just, trying to raise capital and they're like, oh, why are you here? It's like, oh, I just want to meet rich people.
Yeah.
Like, do you want to guess like
people do that though. People do that. Yeah.
They do. And like, for me, like, that's just not genuine. Like, I would much rather connect with people. It's like, hey, like you want to be able to travel and do these adventures, but still have money and be building wealth. Like we can help you do that. Like we can help you get to that lifestyle that you're looking for.
Yeah, it's super important because when you're doing a syndication as a sponsor, you're hoping that you have lifetime participants. So the deal exits and they just put the money back into a new deal. That's really the goal because it helps everybody. They're going to get steady returns and then you have funding for your next. So that's really what I think people forget because they maybe see people looking for these giant syndications and grabbing, non-credit investors or whatever, just looking to get a whole bunch of chunks. But really, you can operate the best syndicators over time, really end up with just a very small list of the same people, just keep putting the money back until there's more assets. But a lot of times they're not necessary. Is that what you guys are looking to do? I mean, I know it's a yes from how you're talking, but it's a great philosophy and a different way because syndications on social media look shiny and it does look confusing to investors, but this is really the way to build a long-term business for both you and for those LPs.
Yeah, I definitely we would ideally definitely have people that just kind of keep investing with us and then, refer their friends and family. Like I said, I think it's so important. I'm going to be 40 this year. And I think my generation, I look at retirement and maybe I'm just pessimistic or I'm very favorable to real estate, but I think about can we really save enough money in a 401k from just a W-2 to live a comfortable retirement? And I looked at what I was putting into my 401k and, I was making good money and looking at what the projections were. And I was like, man, even if I keep at this, I still am not, yes, I'll have enough money to live on, but not the lifestyle that I want to live.
Yeah.
And to me, I think it's so important to find people and educate everyone, all of my friends, family. I'm always one day I'm going to get you into real estate. You're going to see the benefits and you're going to invest with us. Because I think it's so important. It's just such a great way to build wealth. And we love helping people get involved and just educating them on it and helping them get to that point where they financially get these benefits and can help them for the rest of their life to be getting this income and this equity and building and the tax benefits of it as well. So
Yeah. I had a prior guest, I think it was Dave Foster, use the words lifestyle architecture. And I love it because that's really what we're after. I always say here that no one's really after the money, they're after time. So if you can get time freedom, but you're trying to create this lifestyle architecture that suits whatever it is, what you guys want may not be what someone else wants, but everybody wants the freedom to do what they want with their time, which relates to the lifestyle. A lot of times it relates to spending time with friends and family and more time. And sure, IRAs can do well. Stocks can do well. I still like stocks. I have a lot of index funds because it's steady extra. But I agree. I like real estate because I think you can watch it grow and you can watch it turn over, exit, and then put it back in and do it again. And it is hard, though, to get people, especially if what they see out there looks shady, and then they know you're not shady, and you're like, hey, real estate's a great vehicle for your future. They kind of have a hands-off approach, well, I was watching this video, and you're like, well, that's not going to help. Tell me who it was. Oh, okay, now I understand.
Yeah, that's why the education I think is so important, and just being very open. One thing, it's in one way, going to local meetups and meeting local investors, majority of the people that I've met are so open and willing to share and help. Yeah. And just I do the same. It's if I meet a new investor, I will be more than happy to share with you the numbers on a project and how things went and stuff like that, because I think it's so important. But then you get some people that don't seem to want to share. And to me, if somebody's talking about a deal or talking about something and they're sort of omitting information, then I'm like, something's not right. Or when people talk about, hey, I just bought this property that cash flows $1,000 a door, and then you find out that all that they're doing is taking gross rents and backing out principal and interest. I'm like, that's not cash flow.
Yeah.
You haven't factored in any expenses. That's not cash flow. But people, and I think that also makes it hard for new investors because they hear these people promoting, I'm getting $1,000 a door, but they're not saying that $1,000 a door includes no expenses.
Yeah, absolutely.
Anytime we share a deal, I try to be this is our cash flow per door, but here's here's our property taxes, our insurance, our maintenance, our landscaping, all of these are backed out. I'm considering vacancy. I'm considering all the expenses. This is what the true cash flow is. I just think the more transparent and open honesty of deals, it makes it easier for the new investors. But majority of the deals that I see people promoting, and I'll ask them about it, none of them are accurate. None of them include all expenses, and it drives me crazy. I'm like, you're so misleading. That is not accurate. That is not cash flow.
Yeah, I ran into that early on. One of my friends and I, we were trying to get off-market mom and pop self-storage, and I wasn't the due diligence person. He was great at due diligence. And the first thing we would see is they would say well, I don't have management. It's but we don't want to self-manage 200 self-storage units. So that counts. We're counting that into our numbers on a pro forma. You can't give me a pro forma with no management. I don't want to manage this. And I think you're right. People can say, I have this cash flow. That's not the cash flow. The cash flow is what's going into your pocket.
Yeah.
Not what comes in initially and then all the stuff gets taken out of. And it can be very deceiving and hard for even seasoned investors who are busy. People who have extra money to invest, they can really get snowed on some of this stuff if they don't sit down, talk to the people, and develop this. I love what you said about the meetups, because I have always said that across the board, real estate investors will share everything except their contractors. That's the one thing that I give them an okay as because they're doing all their jobs. That's fine. But I grew up with a dad who was a real estate investor, taught me everything, and all of his friends knew stuff. And I've always been open with my information because I feel like most people aren't going to put it into play anyway. So what's the big deal? If I can tell someone exactly what to write in the letter, they're probably just not going to do it. If they do, great. I've helped someone, but I think that's really important. Meetups, I really think, are so important. Even if you're larger scale, going to local, you learn from meeting other people. You may find someone who's a JV partner at some time. And it also keeps you kind of in real estate. So when the market is hard, as it was in Salt Lake and those areas for a while, you're still getting these like conversational reps talking about real estate, hearing about somebody else's deal. And then you may meet that person who said like, well, I did 70 units, 70 is no problem. It's just like 40. And now you said like, okay, maybe the 50 can be 70 because Bob over here in shorts and a t-shirt who has like 270 units all owned by himself, he's doing it. That's what I think is really interesting. Have you guys found that? Because you're really good at relationships. You both seem like very friendly and affable people. And I think that really helps develop a whole brand around real estate because it's authentic.
Yeah, the going when we learned about RIAs, like all these things we just learned about in like the last couple of years, and now I'm the VP of the Utah RIA, and I learned about it.
That's awesome.
It hasn't even been 2 years. It'll be 2 years this September that we like learned about what a RIA was, and just the value of those, and going and speaking to people and building those relationships. Because now between those and the couple mentorships I'm in, I don't know everything, but I know someone that does. Like nothing knows everything, but there's nothing that I feel like if I come across that I won't be able to either be like, I know this person can help me, or I can't reach out to a few people that I know within like one or two people, I'll be able to get the help that I need. And having those relationships and having that just gives me so much confidence to know, like, it does not matter what happens. I know that there is somebody that I will be able to reach out to and that I will be able to talk to that can help me through what I'm going through or give me suggestions on how to deal with it.
Yeah, I across the board. And I think there's people you can find. I mean, I go in the forums still on Bigger Pockets every day and just answer questions just because I like to help people. Like that's available. There's lots of people that I've known for 10 years who were just all in there answering questions. And then that translates to real life. You know, I think that's the longer scale. I guess from people who are brand new, they just look at things outside and think everything's like a sales mechanism, which to be honest, for some people it is. So I can't blame them for being harder. What's one piece of advice that you could give new investors in trying to figure out who is more authentic, you know, when maybe they're like scared to have that first conversation, you know, because they're always looking on the outside. It's like, how did you guys figure out which people, you know, in the things that you were doing were really going to be assets to you long term?
Really, it was just kind of time. Like, I mean, you could meet somebody, and the first time you meet somebody, everyone immediately kind of gets their feel for them and gets an idea of who they think they are. But it's really building the relationships. Like, once you have met somebody in person and talked to them on the phone a handful of times and things like that, like, the more you get to know somebody, I feel like the more you can really figure out, like, is this a genuine person or not? Are they being honest? And just asking questions. Like, it's in a way, it's sort of amazing that, in my opinion, how quickly, if you start pushing people, especially if you're questioning if somebody is being honest about a deal, and you just start asking them, like, does this include maintenance? Does this include utilities? Just by asking questions, you'll probably pretty quickly see, like, they're either going to be like, oh yeah, our maintenance is this,
right,
we factor in this, or they're going to be like, oh, like, as I've had people tell me, well, the tenants pay the property taxes, the tenants pay the utilities. I'm like, the tenants are not writing a check to pay my property taxes.
Yeah, exactly.
No, so it's like, you just inquire and ask questions. That's another way that I feel pretty quickly you can tell whether somebody is being genuine and honest or is trying to boast and make their information look a lot better than it actually is.
Yeah.
So
I agree. It is tough. I hope that you've given a lot of information on ways that people can get started and then get going, because your journey really isn't that long. And I think that's so encouraging for new investors, but you are very motivated.
Yes.
So I think it's important for people to know, like, when you're saying attendance or seeing people in time, just showing up at a meetup every month will get you very far. Mm-hmm. Even if you just stood in the corner, people after 3 months will be like, hey, look, there's Bob again.
Yeah.
You know, and I think, like, it's just, I always think of it as reps and like Malcolm Gladwell's tipping point. Like, you just need to be in the room. And if you keep being in the room, then there's going to be new people who are newer in the room the next time. If you've been to one, those people will always get stuff done over time if you just show up for yourself, which is very clear what you were doing when you made the decision. You're like, I'm going in, you know, John's on board. You're like, we're going to do this. And now you're just continuing to push that forward. So I think that's going to be great motivation for our listeners, and I appreciate it. Before we hop off, though, tell us where the best place to find you guys is.
Instagram is probably the best. More Doors with Lisa, more with 2 O's.
And an E, the Moore. They can make it all different ways,
Yeah, Instagram, and then we're also on Facebook and our website, More Life Capital. We've got a free resource right now for landlords, just some like tips and tricks, things that we've kind of learned over the years. We're working on a couple other free resources that'll hopefully be up within the next couple of months. But any of those places, if you ever have any questions or whatever, don't hesitate to reach out. So
awesome. Well, I'm glad I got you on. And I'm glad I got to see John before the podcast started, because I do talk to him on Instagram a lot. And it's good to get this done. And I look forward to, of course, staying in touch and seeing you guys if I make it out west, which I am planning to do.
Yes. Let us know when you come to Utah.
Yeah. Awesome. Thanks for the time, Lisa. I really appreciate it.
Yes. Thank you, Jonathan.
All right. That was Lisa Moore. I'm Jonathan Green. We will see you next episode. Wait. You have reached the end of the show. This is the part where you're going to get ready to check out, but I've actually changed this part. For over 120 episodes, you heard the same thing. Well, now I've changed it. I've thought about doing intros to the next episode, but I'm going to hold off on that for now. These are my pitches at the end. I've got nothing to sell you at all, but I do want to remind you that it really would help us if you support the podcast in the right way. All that means is subscribing to the podcast so you get it on Monday and Thursday, writing us a 5-star review if you believe that we deserve a 5-star review, sharing it with your friends, and being a participant in the Zen and the Art of Real Estate Investing community. Soon there's going to be a new website launched. Maybe when you're listening to this, it's already going to be out there. That's where we're going to have collaboration. You're going to be able to see a lot from the guest. It is coming soon, and I just want to tell you, from me to you, I don't know how I got here, over 100 episodes. I'm so appreciative of you listening to the podcast and especially sticking around to hear this part. We'll see you next episode.